The stock market has been moving lower the last few days, and a lot of the tension seems to be surrounding what's happening in the Middle East. And this morning we got more updates on that situation, with Israel vowing to intensify attacks after an Iranian missile hit a major hospital. And recently the market has been a little bit mixed. We've seen some software companies down, however other tech companies up, and then we've seen the financial credit services actually getting hit pretty hard here recently, but banks holding up pretty strongly. And while the stock market is closed today for the Juneteenth holiday, we are also seeing the futures market remain open, as well as the foreign exchange. And what we see here is that in response to some of this news, the market has not moved a whole bunch. But the thing I want to think about in today's video is that if you do get some sort of broader geopolitical scare in the Middle East, could this produce a longer term opportunity to pick up some names of stocks that we've been watching on this channel the last few weeks? Specifically at the index level, I would love to see a pullback on the S&P 500. I think we've gotten a little bit stretched here. We've had this kind of one directional grind to the upside. If we do get a pullback to levels like 5,800 on the S&P 500, that could be a nice opportunity in my view to start adding new stocks or add to the position size that I already have in some of the stocks in my portfolio. And if you stick with me through this video, we're going to be talking about a couple hot movers that have been going on recently, like the big sell-off in solar stocks. We'll talk about Robinhood, SoFi, the Coinbase jump up 16% in yesterday's trading. Nvidia did really well here and continues to heat seek towards that all-time high. ExxonMobil and Energy Transfer, some of the energy names, I think could be interesting to look at with all of this geopolitical stuff going on. And finally, we'll also take a look at Lockheed Martin to see if the aerospace or defense stocks may be an interesting place to look at with all of the stuff going on in the Middle East, as well as with Ukraine and Russia. And all I ask as we get started is if you enjoy my content, make sure to hit the thumbs up button and subscribe to the channel if you're new. Let's jump in. So the first thing I want to take a look at is this Enphase Energy company, which is a pretty prominent name in the solar space. Now, the solar space used to be a red hot area. I remember back in like 2021 into 2022, Enphase and all these solar companies were all the rave. Everybody was thinking, hey, you know what? The world's going to go solar, and this company is ripe for the picking to be a huge winner and all that. I mean, this stock during this run up right here, that's a 1,600+% move. It was a giant winner for a while, and now it has gone from being a giant winner to a massive loser, down almost 90% from its all-time highs that we saw just a few years ago. And so I want to talk about two reasons why this stock may have gotten absolutely killed in the recent years. And the first one is actually a pretty obvious one. The first one is the spike in inflation that we got in recent years, leading to the Federal Reserve here to hiking interest rates. Now, specifically why that is problematic for a stock like Enphase is that these are expensive things to get installed. And when people are experiencing rising costs of living and, basically they pull back on discretionary spending, this concept of saving money through going green and buying solar panels for your house or for your business or for whatever becomes a little bit less attractive, and the affordability of these things becomes, less available. A lot of people take financing in order to make a purchase of this sort, and so we saw Enphase absolutely get killed in a higher interest rate environment than what it had been used to in years prior. The second one is, of course, the change in administration here in recent years. I don't think is necessarily a positive thing, as the Trump administration is not particularly favorable towards climate change stuff and that sort of thing, and so that narrative, which is a bull case in some ways for Enphase, seems a little bit weaker under an administration that doesn't seem as aligned in that regard. But I wanted to take a few minutes to ask the question, is this actually now a better buy since we've had the complete reversal of this hype, or is this one better left alone? And to answer this, I think we have to take into consideration a couple things. We'll start by taking a look at the high-level financials of this company. So taking a look at the financials report on the stock box, which you can find out more information about in the description down below. What we have here is a net income, revenue, and profit margins over time for ticker symbol ENPH, Enphase. So what Enphase has seen here recently is a very different model than what it was before all of the interest rate hikes. So what you can actually see is right around the time that we started to get interest rates going up, which was, in this area here, we actually saw the material weakening of the business model. You can see the revenues overall were increasing, and then all of a sudden they started started to top out, and down they came. But also alongside that, the net income dropped off a cliff. And at the same time, we saw the profit margins of this business completely collapse and have made a slight recovery in recent years, last 2 years or so. But for the most part, we saw a complete unwinding of this picture perfect, looking amazing, massive growth company now going into a down 90%. And this is a good example, guys, of when you're talking about a stock that looks really great. If you had looked at InPhase from this point, you might have said, this company looks like it's going to change the world, it's going to be super profitable, and it's going to scale and become a ginormous winner. When that sort of story, which looks so good and investors are so optimistic about it, becomes a story of declining profit margins, net income, and revenue, when you see that materially change, perhaps in this case due to a number of factors, but the big one being, in my view, interest rates. When interest rates went up, this company really lost a lot of its edge in terms of the availability of its products to consumers and to businesses and to everybody. So the question is now, is this a healthy bounce back that we're starting to see? Well, we do see the recovery to a certain degree of the profit margins here, and we also see net incomes slowly trying to crawl back here. But let's just take a quick look at a couple other factors here. For example, the PE ratio of this company. How expensive is it priced? Well, you can see even though we've dropped it by 90%, we still have a pretty expensive stock here, right? And what I mean by that is that we are expecting a lot of growth in terms of future projected earnings. And what you can actually see as we go through this list here, that they've actually been disappointing in some ways here recently on their earnings per share estimates versus what actually materialized in their earnings report. So if we take a look at, for example, in the last 1, 2, 3, 4 quarters, what we've seen is the yellow line is the expected earnings and the green is what actually showed up. And so we can see 1, 2, 3 out of the 4 times they missed their earnings expectations. Their earnings per share in the trailing 12-month basis really took a big hit and is starting to try and crawl back. But the question is this a sustainable rise back for this company or not? And this is where, again, is the risk to reward worth it now that you've had a dramatic drop off in share price? And again, that is the question for investors to think about here. From a thematic standpoint, is solar something that you think is going to go up over the long term? I'm very curious what you guys have to say on this, and make sure if you do have an opinion to drop a comment down below. I personally do actually think that the Federal Reserve is likely to cut interest rates, possibly even 3 times this year based on some of the macroeconomic data. Yes, tariffs are an uncertainty for the Fed, and we heard from them yesterday, which I'm going to be covering on my main YouTube channel. If you haven't already followed that one, it's just Trader Nick. On YouTube, I'll be covering what Jerome Powell said yesterday, which was impactful. But you can see on the micro level, right around that Fed interview or that Fed press conference, InPhase dropped off dramatically as well, because this is a company that is hypersensitive to interest rates, and Powell came out a little bit hawkish. However, if you're someone who wants to bet on rate cuts, to me, this would be if you like the idea of solar becoming a bigger thing in the future and the growth that once was for this company returning, perhaps this is a long-term buy that could pay out well. However, it is a high-risk, high-reward kind of company. And now that we've talked about a stock that's a big loser here recently, let's now bounce back and talk about a big winner here, which is Robinhood, which is a stock that I really like and have liked for a while. I actually bought a good bit of shares in the sell-off that we saw in April, and this has been, for me personally, my best stock this year, my best pick this year that I've been in, and I still really like the story here. We can see the stock price is hitting $78 per share. In April, guys, it was at 30 something. Just goes to show when a company when a high-growing company like this has huge potential, the market will scoop it up really aggressively in any sort of market downturn. And so when we look at Robinhood, what's the story here? Why is this so bullish here? Well, there's a number of reasons, but I do think that the high levels of trading activity, retail traders becoming more and more ingrained in this platform, I like the story from Robinhood, both, I think short term it's a little bit overbought, but from the long term perspective, I love this stock for a number of reasons. But the most obvious one to me is that many investors that are young today, but will continue to scale up and grow their wealth in the coming years, decades even, many of them I think are going to stay with what introduced the masses in America to investing, which I think the number one player in that role is Robinhood. Robinhood introduced free trading in terms of commission-free trading, and they made it so accessible for the everyday investor to get involved. Everybody I know who knows just a bare minimum about stocks, their go-to app if they want to do any sort of investing is Robinhood. And I think over the years, while that may not attract the older generation of investors, I think it's very attractive to younger generation investors who scale their wealth for years and years to come. I personally have a Robinhood account from years ago when I first started in this stuff and have continued to maintain it throughout the years. I continue to add to it. Now I have other brokerages as well, but I think Robinhood is by far the easiest UI. They are on top of their game with that side of things. And I think that there's a ton of growth. They're also getting into the pseudo betting markets here recently, which is a hyper profitable entity as well. And I think that the business, the team management there looks remarkable. So this is a name that for now, as long as we continue to see growth, as long as we see things heading in the right direction, I would actually be a fan of adding more shares if we do get a market turn down in the coming days, weeks, and months to my Robinhood position. I do think it's a bit stretched here at this point, but if we were to get a pullback down into the 60s or so, I'd be very interested in adding some shares to my existing position. A similar company that I don't have share in is SoFi. SoFi Technologies. This is a company that is really interesting for a similar reason. It's essentially a digital online banking interaction. It's sort of a disruptor to the existing brick and mortar bank business model where many young people, many millennials and Gen Z people love the idea of doing all of their banking as well as their investing, as well as their refinancing or getting a loan, all these things within one really intuitive app. And I think this is an awesome, in terms of company for that side of things, investing in the longer term adaptation to something like digital online banking. People nowadays love to do everything online. They rarely want to go into a physical place if they can avoid it. And so companies like SoFi, which have huge growth and the stock has been a really strong performer here in recent years, I think have a lot of potential to continue growing. And I would like to establish a position on SoFi if we did get a pullback into the low teens, or even if we made a move back down to the tens or below the single digits again. This would be a stock where I'd like to establish an existing position. I don't have one yet, would like to get one though. And let's talk about Coinbase, which was up 16% here recently as Senate passes a stablecoin bill. More directionally positive things for crypto here recently as we see more adoption from central governing agencies here in the United States. That's a very positive thing. Obviously, we have Trump in the White House, who seemingly is more pro-crypto, and then getting something like this in terms of stablecoins passed, I think adds infrastructure to the existing crypto space and is an incredibly bullish thing for both Robinhood and Coinbase. I forgot to mention this with Robinhood. Part of the reason it also traded up in sympathy to your Coinbase move is because, of course, Robinhood does a lot of crypto stuff, and a lot of young investors do their crypto trading or investing within the Robinhood platform as well as the Coinbase one. So you can see the Coinbase stock price here absolutely exploded higher, 16 at 1.17% in a day, and still looks incredibly strong. I also wanted to talk just briefly here about what's been going on in the Middle East. Of course, we hope and pray for peace in the region. Any sort of loss of life is a tragedy, and we do hope that we see peaceful resolutions as soon as we possibly can. That being said, in response to this, we've seen many of the energy stocks like Exxon, another company that I like, Energy Transfer, these companies looking really strong here recently, and I do think that it is one of the areas of the market I'd like to add some positioning to if we do get some dips in some of the specific names that I like Exxon and ET. Finally, Lockheed Martin is of course another big winner. Anytime you get some sort of geopolitical conflict arising, if we go back really quickly to like 2022, we saw a huge push up in this stock in response to everything that happened in Russia and Ukraine. We've seen a fall off here as Trump took office, but now there does seem to be geopolitical stuff starting to materialize that could lead this stock to being a nice hedge in the portfolio. It is a bit weird to bet on simply because it's you're almost like benefiting from something that's horrible going on. But in terms of a hedge in the portfolio, Lockheed Martin may be one to keep an eye on. And if you're enjoying my videos, I'd love it if you could let me know what you want me to cover next down below in the comment section, and subscribe if you're new to my channel. Thank you for watching.